It's John King, and I'm here with my weekly market update. It is Friday, the 21st of July. I've got some great topics we're going to talk about today. So first of all, we're going to talk about the market. What's going on with the housing market? What's going on with interest rates? I'm going to give you an update on Dream for All and where we're at with that and what you should be working on if you are, in fact, waiting on a Dream for All voucher. I'm going to talk to you about the middle income $50,000 grant and give you an update on some webinars I'm doing next week on that program. And then I'm going to answer the question of, is the idea of homeownership obsolete? Like, is it really a good idea to be a homeowner right now? This market is one that has a lot of people asking that question. I've been answering it more and more, and I want to give you some answers that may in fact surprise you. So let's go ahead and get started with kicking it off. First thing I want to talk about is, are we headed back to a balanced market? So when you talk about the housing market, there's really three categories that people say. Is it a seller's market? Is it a buyer's market? Or is it a balanced market? For the last 5 years, we've been pretty much in a seller's market, which means there's more buyers than there are sellers, and therefore the buyers are at a disadvantage. The sellers have the advantage. The sellers have the edge because they know that you need their home more than they need you as a buyer. Okay. By the way, if you have questions at any point, feel free to post them. It looks like we already have a question. So here's somebody saying, there's a lender saying Dream for All is released and people are getting their vouchers. Is this true? I asked that question. I got an email yesterday from Cal Haffa that said, no. Nobody has their vouchers. They are looking at releasing them by the end of the month. I'll talk a little bit more about this, but no, that is false information. Nobody has their vouchers yet as of yesterday afternoon, and that the people who are saying it are wrong. But they're getting a lot of views, I guess, so maybe that's a good idea. I don't know. All right, so let's talk about the housing market. Again, I'll get to Dream for All. I've got a lot of things I'm going to cover in my update today, but we have been in a seller's market for a long time. It's been hard to get an offer accepted. In 2020 and 2021, you had to write over asking price. You had to be in a position where you waived appraisal contingencies and loan contingencies. And it's gotten a little less extreme, but there's still been, in general, more buyers than there are sellers and not enough inventory for the number of buyers that want to buy. Well, we're seeing the inventory grow. We're seeing more and more houses coming on the market, and they aren't selling as quickly. We're seeing the average days on market, the average amount of time that a seller has a property listed is around 30 days nationally. Now, every market is going to be different. There's some communities that are a lot shorter, some that are a lot longer, but let's just use that as a number. 30 days for them to sell a home means some people are still selling in 7, some are selling in 60. What causes that? Well, what causes it in part is the fact that interest rates have stayed higher longer, and the people who are willing to buy at these interest rates, I think, are they've already bought. And I know that there's a lot of you who are watching right now are saying, well, John, I'm interested in buying and I'm okay with where the rates are. And I don't disagree. But I think relative to the number of sellers is increasing because there's a lot of sellers who were waiting for for interest rates to go down so that they could have more demand on their homes. So they could get back to the market that was in 2020 and 2021. And so what we're seeing is a little bit less competition for every home. We're seeing sellers a little bit more willing to offer concessions. That's a good thing as a buyer, but don't take it for granted, because very, very soon Dream for All is going to be released. So those of you in California, you're going to have 1,700 new buyers competing for the homes that are listed for sale, because you got 1,700 people that have 90 days to get an offer accepted on a home to use their voucher. So that's going to create a backlog or it's going to release a backlog, I should say, of potential buyers that a lot of you have been waiting since March or February saying, hey, I'm going to buy a home and I want to buy with Dream for All. And so at least in California, that's created a weird dynamic that you've got a large segment of the buyer population, first-time home buyer population, who said, I'm going to buy, but I'm not going to ruin my chances to get Dream for All. Therefore, I'm not going to buy yet. And so during the busy spring buying season, we actually had fewer buyers in California out shopping, because those of you who are waiting for Dream for All, you've been sitting on the sidelines. Most people didn't want to ruin their chance to get the 20% money from the state, be able to buy a higher priced home than they could buy if they didn't have the money. And so they've been waiting on the sidelines. What's going to happen once Dream for All comes out in California? What's going to happen with the listings and the inventory, and how quickly is that going to get eaten up? As your seller, if you're in a position to sell your home, is it a good time to put it on the market in anticipation of Dream for All coming out soon? Maybe, but I definitely see the market shifting in the last 60 days, and we're seeing more homes on the market for a longer period of time and more inventory, and the buyer pool is not absorbing that as quickly. So we'll have to see where that dynamic goes. All right, so what's happening with interest rates? They have been all over the board. They're continuing to be all over the board. In general, June's been a good month for interest rates. We got good news on the jobs, specifically the inflation report. Jobs report was a mixed bag, but we are also looking at next month. Every single month we get new reports. The Fed came out this month. I already talked about it last week and has said, hey, we're not going to jump in lowering interest rates prematurely. And so we're going to keep interest rates higher for longer. For those of you who are waiting for Dream for All, you're hoping that Dream for All interest rates come down. Well, if you're low income, today the Dream for All rates are at 6.5, pretty good, the best I've seen in a while. If your normal income for Dream for All, you're still at 6.875. I'm hoping that'll pull down some more, but there's no guarantee. Just remember, if you do get your Dream for All voucher selected, your rate's not locked in until you get an offer accepted on a home and your lender reserves the rate for that particular property. If later you cancel on that property, then you have to get a new rate lock on a new property. So hopefully that makes sense. All right. There has been a lot of buzz about the $50,000 grant program that is going on in California, Nevada, and Arizona. And I am going to be doing 2 webinars next week to give a whole lot more detail about how to get in on it, how to get registered, who's going to qualify. And so there is a link in the description down below. I'll quickly give you a QR code right here. So check it out and click that QR code if you want. If you've already registered under the same QR code in the last week or two, we're going to send you out an email today with a link to the webinars that are coming up next week. If you have not, go ahead and register right here and I'll get you the information. It's a great program. It is a unicorn. It is the unicorn of unicorn programs. The best way I'm describing it is like Dream for All 2023, but worse. And it is, some people got to take advantage of Dream for All 2023. A lot didn't. So just be aware of that fact. Be aware of the fact that this is not the program that you might think it is. And I'm going to share with you all the details of how that's going to work next week. All right, let's switch this back and let's go over here. Let me give you the Dream for All update. So Dream for All, first of all, there's been a lot of rumors that the vouchers have been issued. They have not. They're going to issue 1,700 vouchers, and then 1,700 people are going to be on the wait list based on the county population distribution across the state, or region distribution. We've been talking about this for the last few months. I think we're going to be getting released next week. So CalHAFA sent out an email internally to the preferred loan officers telling us, hey, you are not telling the truth if you're saying vouchers are out, because they're not, and B, that we are looking at the end of June. So right now, they're still saying the end of June. Well, guess what? The end of June's next week. If they thought it was going to take longer, they'd be telling us right now, hey guys, we're pushing into July. So I feel very strong that by the time I do this update next Friday, we should know who our winners are and who's on the wait list for Dream for All. So the question is, what should you be doing right now? If you haven't yet, you should be picking a real estate agent. You should be finding an agent that you connect with, somebody that you feel comfortable can guide you to find the right home and give them an idea of what regions, what cities, what school districts are important to you. You shouldn't go out and take your realtor, have your realtor take you out looking at homes this weekend. It's premature to spend a significant amount of their time, but it is absolutely appropriate to start talking to them, because whether you get selected for a voucher or not, whether you choose to buy a home without the voucher or you choose to postpone, building that relationship with a realtor that's going to guide you in the future is worth it. And you're not wasting their time, because they know that if they can take good care of you today, even if you don't buy right now, when you're ready to buy, you're going to use them. When your friends and family want to buy, you're going to refer them to them. It's the same reason why I spend a lot of time educating people. And if you use me, great. If you don't use me, that's okay. I'm going to be here for you down the road. And great realtors think exactly the same way. So you should be thinking about great real estate agents and who to connect with right now. Do not wait until you find out about the voucher. You need to be reaching out today. You need to reach out this weekend and start interviewing realtors to figure out who it is you want to pick to help guide you through the home buying process. Speaking of home buying, I had 3 conversations this week with buyers who said, John, I'm not sure it's even a good idea for me to buy a home. And we had really, really good conversations on the fact that, gosh, does it even make sense to buy a home today? And I thought I'd share that with you guys right now and give you a little bit of my thoughts and get some of your thoughts and questions about, gosh, is buying a home a good idea in today's market? Or is it an obsolete idea and I shouldn't be thinking about it? So the first thing is cost of rent versus a mortgage payment. There is almost no situation in which your mortgage payment is going to be cheaper than rents. None. You're not going to be in a position where you say, gosh, I can rent this single family home for $3,000 a month and I can buy it for less than that or even close to that. With the significant increase in interest rates combined with the significant increase in housing prices, that just is not possible. So you say, okay, if I've got a good house that I like that I'm renting, then why would I want to have a significantly higher monthly payment for that same house or a similar house in a similar neighborhood? And you're right. If dollars spent per month today are what matter to you, then it's not a good idea to buy a home. It truly is not a good idea to buy a home. But what you have to think about is the future. What you have to think about is as you can progress into the future, inflation says your rent is going to keep going up. Inflation also says your income is going to keep going up. And inflation also says the cost of buying gasoline and groceries and all the things you do in life are going to keep going up. And so you kind of never get ahead. The biggest chunk of your expenses is your shelter, where you live. And so you say, okay, well, yeah, over the next 20 years, I'm going to make more money, but I'm going to spend an equal amount of extra money every single year. I'm never going to get ahead. And so what's the point? Well, the point is when you buy a home, you lock in your shelter payment and it never goes up because you fixed that interest rate. You fixed that monthly payment. Let's pretend interest rates never go down. That's okay because your mortgage payment stays the same, but your your income keeps going up every year. Even just cost of living raises, you get raises every single year. You get promotions, you do a better job and you get a bonus and you start making more money. And as you make more money, your mortgage payment stays the same and it's a smaller and smaller percentage of your growing income. Had you stayed a renter, your income grows and your rent payment grows right with it. You never get ahead. Now, I can tell you all about the benefits of owning a home long-term from an equity perspective and from a tax write-off perspective. And I've talked about those things in the past. But people were asking me, John, the numbers just don't make sense. It doesn't make sense, especially because I've got to cover 100% of the maintenance myself. As you are a homeowner, if something breaks, you can get a home warranty. Now, home warranties are like any insurance. Their job as a home warranty company is to collect as much income as it can for warranties and pay out as little as possible. And I'm being a little bit mean to the insurance industry by saying it that way, but it's kind of the truth. That's how insurance works, is they need to bring in more money than they pay out in claims. And so they don't want to pay claims if they don't have to. But it does help you with major issues that come up. And so is it perfect? No. Is it going to solve all your problems? No. But it is going to put you in a position where you've got the ability to offset some of the major issues that might happen. Air conditioner goes out, water heater goes out. Your home warranty typically will cover those things. One thing I'll tell you is make sure you get a home inspection in the beginning so that you can prove to the home warranty company that it worked the day you bought the home. Because sometimes they'll try and say, hey, this was a pre-existing condition. This water heater, how do we know it was really working? Because here you are owning the house for 6 months and it went dead. And so they might say, we're not going to cover that. So getting a home inspection in the home buying process can help you to fight with the home warranty company. But the truth is you're still responsible for 100% of the repairs, which is why I tell people having reserves in the bank, having extra money in the bank after you purchase the home is the single biggest difference between success and failure of home ownership. Now, don't misunderstand. I'm not telling you not to buy a home when you don't have reserves, because if the difference is renting versus owning, if you can afford the monthly payment that it takes to become a homeowner, but it takes all of your cash that you need, that you have for reserves, then you're taking a risk. You're taking a risk that there aren't going to be major problems with the house in repairs. You're taking a risk that your income is going to continue in the direction that it's going. And your fail-safe, your fallback position is, hey, if things don't work out, you might have to sell the property. People have that happen. A lot of people have that happen, that they buy their first home, their starter home, and they end up a year or two later selling it because it didn't work, but they learned a lesson. They learned how to manage their finances a little bit better. So sometimes the first time you buy is not the best or the easiest, but it teaches you what you need to be successful down the road. But for most people, they buy, they spend all of their money that they have in order to get into the house, and then they slowly start saving. And that's the key, is to rebuild that reserve account so that you have money in the future in 2, 3, 5 years, and something breaks and it's not covered under the home warranty, or you no longer have the home warranty, or you have to pay to renew the home warranty, that you have the money available to do it. But just be aware, you are responsible for 100% of the costs. And the other reason that it's an issue with home ownership and why it's a bad idea is your inability to move easily. For a lot of people, they're in positions where they want to be able to get promotions that might move them across the country. And that means you have to sell the house that you're in right now, or you have to keep it as a rental and make sure you make enough rental income to pay the payment, and make sure, well, how do you buy the next house? Because all your equity is tied up in the house you just moved out of. And so you have to be aware of the fact that it's harder to move when you're a homeowner than it is if you're a renter. If you're a renter, give notice, move out, pay another security deposit, move in. It's not a big deal. But you have to think about home ownership and say, is this really a good idea? And what I'll tell you is, I think it's a good idea for a couple of reasons. By the way, I see I at least have one question. Let me jump over here really quick. Kathy Lewis said, I called their office. They're doing the drawing at the end of June. Thank you, Kathy. Yeah, they said it's going to be the end of June. I don't know if it's going to be next Friday or if it's going to be sometime next week, but they're saying by the end of June that they're going to be releasing it. So thank you, Kathy, for that note. So guys, I'm talking to you about all the reasons not to own a home. And the truth is there's a lot of reasons not to own a home. But what you want to look at is you want to look at long-term. And long-term, it is less expensive over time to own a home. Now, if interest rates go down, it becomes even less expensive. If you're in a position where you get a big promotion and you get a big pay raise, it becomes even less expensive. But something about inflation, people say, well, John, inflation is not going to be permanent. So you're talking about the fact that rents go up, but at some point, inflation is not going to be the issue. It's only been an issue for the last couple of years. Well, that's not true. Inflation always exists. There are very few periods of time in history where there is deflation. Deflation, as a matter of fact, is a bigger problem. Deflation means the cost of things drop from one year to the next. That's actually a major economic issue if we have deflation. So inflation typically always exists. It isn't significant inflation. So you have prices that go up by 2% per year instead of 10% per year. So the problem we dealt with in the last couple of years is the fact that inflation was going up too much, and it's still going up too much. Now, it's not going up as much as it was a year ago, but it's still going up more than the Fed would like. When inflation becomes under control, prices are still going to go up. Prices will not go back to where they were. So you can't say, John, once inflation is gone, then I don't have to worry about my rents going up because we won't have inflation issues. Your rents will always go up over time. Maybe not this year, but next year they will. And maybe not that much, but at some point they're going to keep going higher. Your mortgage payment, once you get locked in on that mortgage payment, it stays the same. And if interest rates drop, it can be lower. As you build equity, you can actually use your equity in your home to pull cash out to pay off higher interest rate debt. There's a lot of long-term benefits to home ownership. But the fact is that it goes back to short-term. You will not find a house payment for a home that you own that is cheaper than what you'll pay in rent. That was almost impossible back in 2019 in most markets. And since 2019, in the last 5 years, we've seen prices go up significantly. We've seen interest rates go up significantly. And big picture, it's not going to get cheaper. As interest rates come back down, I think prices are going to go up even more. And so you have to say, do I want to be a homeowner? If you don't, that's okay. But I want to point out one really important statistic, and that is the average net worth of a homeowner is around $350,000. Now that's every homeowner in the nation, how much money they have in bank accounts and 401ks and equity in the home. minus everything they owe. How much is their mortgage balance? How much is their car loan? All of that. The average homeowner has a net worth of $350,000. The average renter has a net worth of $10,500. $10,500 is the average net worth. And that means that some people have a net worth of $100,000 because they got a good amount of money in their 401k. But a lot of people have nothing. A lot of people have nothing. Now, the day you become a homeowner does not mean you immediately go from $10,500 in net worth to $350,000 in net worth. But over time, that's what builds. Your value of your home continues to go up. Your balance on your mortgage continues to go down. The difference between those two is your equity. In 30 years, you own the home free and clear, unless you did Dream for All, in which case you got to pay back the state. But in general, home ownership leads to greater long-term wealth, stability, and security. But you got to make a decision whether you're willing to sacrifice the short term. So I think that home ownership, it's served me very, very well. My wife and I have owned multiple homes over the years. We almost made the mistake in 2011 when we sold a home, and my wife and I were making a move to a different city. And I, being the smart mortgage guy that I am, said, you know what? Housing prices have dropped so much between 2007 and 2011. And I think they might keep going down lower, honey. We should rent. We should rent a home until we see the bottom of the market. Well, the truth is we were at the bottom of the market and we didn't know it. My wife said, do you like being married? And I said, yeah. And she goes, then we're buying a home, because I don't want to be a renter. I want to be a homeowner. I want the stability that comes with home ownership. And aren't you in an industry that believes in home ownership? And I said, well, yeah, but I might be smarter than the industry, but I'm not smarter than my wife. Happy wife, happy life. We bought a home. And that investment paid off very, very well. And we sold that house in 2022 for a very sizable gain and took that money into our next house. And that's the home ownership ladder. So people think a lot about, hey, I want to buy a home and I want to get the home. And John, I don't know if I should do it now because I can't qualify for the home. You start out with your starter home. It's literally called a starter home for a reason. You start with the starter home. You take the equity from the starter home and you move it up into the next home. And you build upon that. It's a home ownership ladder. You got to start out at the first rung. Sometimes we get lucky and we get to jump to the second or the third rung. But most of the time, you got to start out at your first car is not a Lamborghini. It's pretty rare that it is. So you've got to decide, is home ownership important to me? And if I can't afford my best house, do I get a house? Do I get in the market? What concessions do I need to make? You got to start thinking about that early. You've got to think about, am I willing to make a longer commute? Am I willing to buy a less expensive home? Am I willing to buy something that's older that needs more work? There's a lot of concessions that you should be thinking about. And for some people, you should just not be buying a home. I am not here to tell you home ownership is for everybody. What I'm here to tell you is, if you think it's right for you, you have to be prepared to either have a significantly higher monthly payment in this market, and I believe that it will pay you very, very good dividends in the long run, or you need to be prepared to buy a house that does not meet what your expectations were. Have some concessions in the home that you're looking to buy. But no matter what you plan on doing, just know I'm here to be your guide. I'm here to help answer your questions. If you have any questions, by the way, and you're watching live, go ahead and post them right now and I'll pull them up and answer them. But aside from that, I am interviewing to be your lender. I'm interviewing for the opportunity to help guide you through the process, to help give you answers to questions that you didn't even know existed. So please think of me when you're looking to buy a home, when you're looking, if you get your Dream for All voucher and you feel like, man, John's giving me 100 times more value than the lender that got me a pre-approval that just spent 10 minutes quickly giving me a pre-approval letter, then give me the opportunity to actually serve you through the loan process. And you'll be happily surprised at how this continues throughout the loan process and how we help to guide you and nurture you, not just in this one transaction, but for the entire future. You are stuck with me. Once you do a loan with me, I sink my teeth into you. I invest into you emotionally, and I want to see you succeed. And therefore, I'm going to be there for you to help answer questions in the future and guide you about, hey, when is it the right time to refinance? Should I pull cash out? I help people think about ideas of, hey, life insurance. Should I be looking at life insurance, and who should I talk to? Financial advisors, and should I be thinking about a financial advisor? Maxing out your 401k and whether that's a good idea, or even Social Security. I'll tell you really quick as a bonus today. I was talking to one of my coaches the other day, and they reminded me that so many people think waiting and delaying getting your Social Security is a great idea, but it's not. Like taking your Social Security for most people, you got to run the math. And they say, well, gosh, if you wait to take your Social Security until you get to whatever, 67, then you get a few extra $100 a month. But it takes you living until you're in your late 80s to make up for that. Like the average person is never going to make up for the months they didn't get paid. So most people should start taking their Social Security as soon as you have the opportunity. And that is financial health, financial well-being, a lot of thoughts that nobody knows who to turn to. I want to be that person to help you. Now, I'm not licensed to give financial advice, but I'm your friend and I want to help give you advice about who to talk to and what things you should be talking to them about. So I look forward to guiding you through your entire homeownership journey. If you have questions about anything at all, please feel free to reach out to me. And I would look forward to talking to you guys very, very soon. Hope everybody has an absolutely wonderful weekend. And hopefully next Friday, we'll know who was selected for the Dream for All vouchers. And we'll get you guys moving forward to getting your dream home. Thanks. We'll talk to y'all soon. Bye-bye.